Okay, so Microsoft just dropped its quarterly earnings, and wow, it is making some serious waves. The numbers are huge, the growth is wild, and there's one thing at the center of it all: AI. So let's dive in and break down what is really going on here.
First up, just look at this number. In a single quarter, Microsoft raked in $81.3 billion in revenue. Just let that sink in for a second. That is an absolutely colossal amount of money for any company in just 3 months.
And it's not just the sheer size of that number, it's the speed. That 81 billion, it's a 17% jump from the same quarter last year. For a company as gigantic as Microsoft, growing that fast is, well, it's incredibly impressive. But that's not even the most jaw-dropping number.
Now this is the one that really gets you. A 60% increase in profit. So you might be thinking, wait a minute, 17% revenue growth is great, but how on earth does that magically turn into a 60% explosion in profit? Well, that is the big mystery we're about to solve.
Microsoft's own CEO, Satya Nadella, basically hands us the biggest clue right here. He's telling us that this whole success story is built around AI. He says it's already one of their biggest businesses. This isn't some side hustle for them, it's clearly the main event now.
Which brings us to the core question, right? We see the massive numbers, we hear all the AI buzz, but what's actually happening under the hood? How is AI really changing Microsoft's business and, more importantly, its bottom line?
And the answer, as you probably guessed, starts in the cloud. You can think of this as the engine room where this whole AI revolution is being built. And yep, it's where Microsoft is seeing the most incredible results.
Just get a load of this number. The Microsoft Cloud business all by itself brought in $51.5 billion this quarter. That's more than half of the company's entire revenue from just one division. It's like a massive company living inside an even more massive company.
And here's what's so wild. That enormous cloud business is still growing at 26% year over year. That is the operational engine just humming along, pushing the whole company forward. But hold on, 26% growth still doesn't get us to that crazy 60% profit number. To figure that out, we've got to dig just a little bit deeper.
Right, to really get our heads around that headline profit number, we have to step away from the products for a minute and, well, we have to look at some accounting. I know, it sounds dry, but I promise you, this is where the real story is hiding.
So, in financial reports, you'll always see this term, GAAP. It just stands for Generally Accepted Accounting Principles. Really, all you need to know is that it's the official rule book. It's how all U.S. companies have to report their numbers, period.
And here is the all-important difference. You've got your GAAP profit, which follows the rule book and has to include everything, even paper gains from investments that haven't been cashed out yet. But then, companies also report a non-GAAP number, which strips out those one-off things to give you a much clearer look at how their actual day-to-day business is doing.
And boom! This table solves the whole puzzle for us. The official GAAP profit shows that massive 60% growth, but look right there in the middle. $7.6 billion of that profit wasn't from selling software. It was a paper gain from their investment in OpenAI. So once you pull that out, you get the non-GAAP result. This is the real performance of the core business, which, by the way, is still a phenomenal 23% growth.
Okay, so the big takeaway here is that even though the headline number got a big boost from an investment, the actual underlying business is still incredibly strong. So now let's break down where that powerful 23% growth is coming from by taking a quick look at Microsoft's 3 main business areas.
So you can basically split Microsoft into 3 big buckets. First, you've got productivity and business processes. Think Office 365 and LinkedIn. Second is the intelligent cloud, which is where Azure lives. And third is more personal computing, which is home to Windows and Xbox. Right away, you can see that the first 2 are the absolute twin giants of the company.
So that productivity segment, home to all those classic Microsoft products, is just chugging right along with a really solid 16% growth. It's a strong, steady workhorse for them.
But this is where the real action is. The intelligent cloud segment is absolutely on fire, growing by 29%. This is where all that demand for AI is really, truly showing up in the numbers. This is the growth engine.
And let's just zoom in one level deeper, because inside that intelligent cloud business is the crown jewel, Azure and their other cloud services. That part of the business grew by an astounding 39%. This is the hyper-growth engine, powering the entire company, and it's all about providing the plumbing for the AI boom.
But, for a complete picture, it's really important to see that not everything is rocketing up. The more personal computing segment, again, that's Windows and Xbox, it actually shrank by 3%. This really just shines a spotlight on the huge strategic shift happening inside the company away from its old-school PC roots and toward an all-out focus on cloud and AI. So, when we put all of these pieces together, what does it really tell us about Microsoft's strategy? Well, it's a super clear, unambiguous story. They're betting the entire future of the company on winning the age of AI. So let's just recap the 4 key things to take away from this. First, that flashy 60% profit number was definitely misleading, boosted by a paper gain from their OpenAI investment. Second, the real operational profit growth was still a very, very strong 23%. Third, the absolute powerhouse here is the intelligent cloud, with Azure growing at that staggering 39% clip. And finally, all of this success is deeply, deeply connected to Microsoft's all-in bet on AI.
Which leaves us with one final big question. I mean, the numbers are incredible, and the AI strategy is clearly paying off in a huge way. But by going all in like this, has Microsoft basically tied its entire future, both the massive potential and the massive risks, to a single, very high-stakes technological gamble?